This video is for educational purposes only and should not be considered financial advice.
The magic of the ICT Unicorn Trade. Outline. Intro. The components of the ICT Unicorn Trade. Increasing the probability of success. Examples. And recap. Intro. In this video, we will be covering the ICT Unicorn Trade. If you've been trading for a while, you know how elusive those perfect setups can be. But today, we're diving into one of the most coveted setups in trading, what we call the ICT Unicorn Trade. This trade doesn't come around often, but when it does, it's a game changer. By the end of this video, you'll know exactly how to identify this setup, why it's so powerful, and how you can use it to potentially grow your trading account significantly. The components of the ICT Unicorn Trade. So what exactly is a unicorn trade? The term unicorn is fitting because this trade setup is rare and incredibly valuable. The core of this trade is the alignment of specific market conditions that create a high probability scenario with low resistance. To identify an ICT unicorn trade, you need to focus on two main elements: fair value gaps and order blocks. But it's not just any order block you're looking for. It's an order block that exists within a fair value gap. This alignment is crucial because it indicates a strong imbalance in the market where price is likely to move swiftly and with minimal resistance. Now let's break this down a bit more. A fair value gap occurs when there's a sudden and sharp movement in price, leaving a gap where not all orders were filled. This gap represents an area of imbalance where the market often seeks to revisit to fill those unfulfilled orders. An order block, on the other hand, is a zone where large institutional players have placed significant buy or sell orders. When an order block is located within a fair value gap, it signals that institutions are likely to defend this area, making it a high probability zone for price to reverse or continue its trend. To spot this setup, you'll need to be vigilant during key trading sessions, especially during the ICT Killzones, which are periods of heightened market activity where these setups are more likely to occur. Watching the price action closely during these times can help you identify when price is going to reach for the previous fair value gaps with an order block in it. Increasing the probability of success. While the core elements of the ICT Unicorn Trade are essential, there are additional factors that can increase the probability of success. One of the most important is ensuring confluence with other ICT concepts. First, consider the new week opening gap. This is the price gap that often forms at the start of the new trading week. When the ICT Unicorn Trade aligns with the direction of this gap, it adds an extra layer of confidence to the trade. Another key factor is low resistance liquidity runs. This concept involves price moving through areas of low resistance, where there are few obstacles to prevent it from reaching its target. When your trade is in line with a low resistance liquidity run, the chances of hitting your target are significantly higher. Additionally, look for liquidity pools. These are areas where the market is likely to seek out stops or pending orders. When your trade setup aligns with a liquidity pool, it increases the probability of a strong move in your favor. Finally, timing is everything. The ICT Killzones, particularly the London Open and New York Open, are times when the market tends to be most active and volatile. Trading during these periods increases the likelihood of your trade playing out successfully. Now let's take a look at some examples of the ICT Unicorn Trades in action. Here are two setups that happened during the week. We'll go into more detail, but just to look and see how they don't occur as often as other trading setups. But twice a week is enough to make a living. In this example, we see the new week opening gap, and we draw that out. Then we see during the New York session that liquidity of London was taken. Then we see an order block formed right here. This order block, this whole move from here all the way up, is the order block. The three candles moving to the upside constitute the order block. Now, yes, there is a propulsion block here, but this is what we're focused on. And we see that that order block is flanked by two fair value gaps. But it's key to pay attention that the bottom of this wick dips into the second fair value gap. So when price comes back down and then retraces back into that fair value gap, that is your cue to take your entry. It would be a good idea to look for other confluences to make sure that the trade is going in your direction. And if you have the 513 EMAs on your chart, you can see that the 5 has crossed the 13, and then once price closes below the 5 EMA, that can be an entry. But there's a lot of confluence giving you confidence that we're moving to the downside, because we have these swing lows that could be considered equal lows. And if we look, all of the order blocks, fair value gaps, and even halfway points of these wicks have all been mitigated. That gives you the low resistance liquidity run to the downside. And if you want to use the strat pattern, you have a 2 up, 2 down pattern right here. Whether you enter here where price crosses the 5 EMA, or on the 2 down pattern, which is right here, you still get a hefty move. Other confluences are we are under the 200 EMA and we are under the 500 EMA. Plus we have taken liquidity and we have crossed the new week opening gap. Ideally, you would want to take a trade above the new week opening gap to go below it, but this is close enough. In this example, we see an ICT Unicorn Trade right here, another ICT Unicorn Trade right here, and then another ICT Unicorn Trade. This is rare to find 3 unicorn trades within the same day. But if we look here, price created an order block and then a fair value gap. You also have a small order block and then another fair value gap. During the Asian session, price dips into this fair value gap and then takes off. That is one unicorn trade. You also see that there is little resistance over to the left. Price is able to move quickly to the upside. Then after the Asian session, the London session creates liquidity, which is taken during the pre-New York. And then once price dips back down, it bypasses this fair value gap and order block because that was already mitigated, and goes down to this one. And this order block is tapped into right here. Then price shoots all the way up, taking out the pre-New York high and the London high. Then price moves to the downside and creates an order block here. Then price creates another fair value gap that engulfs this order block. Once price dips back into this fair value gap, that is your entry. Now again, you can use a rev strat pattern where you have a 2 down and then the 2 up turns to a 3 to the downside. That is a rev strat pattern. And if you look to the left, you'll see all of this mitigated price action and then equal lows. Price is definitely coming for these equal lows, and it has little resistance. The only leftover area is this fair value gap that has not been mitigated. And that is mitigated on this candle when it returns back up, but then price quickly moves to the downside. And also, another case for this run here, if we look to the left, when we showed the original image, you see this low resistance liquidity happening here. That happens from this area to this area. So price was primed to take out this high, and it created low resistance liquidity right here. So Asia tapped into it, London tapped into it, the pre-New York session tapped into it, and then the New York Open grabbed the rest. And because of all of this mitigation, price reversed quickly and moved all the way to the other side. In this last trade example, we can see this order block created inside of a fair value gap. We like to draw the whole area of the move to the downside just to create a range. And if you move to the right, you can see how all of this price action was the setup to tap right back into that order block inside of a fair value gap. Here is our new week opening gap. Here is low resistance liquidity. Now, true, this fair value gap is not low resistance, and especially since it has an order block inside of it. You also have another fair value gap right here. This section, however, is definitely low resistance. So if price gets above this area and clears this fair value gap, it's going to run all the way up to here. And your last level of defense is inside of this order block right here, these three up candles. So price on the previous day moves to the downside, consolidates during Asia and London, and then during the pre-New York hour, price dips right back, takes this liquidity, and taps into that order block inside of a fair value gap, aiming back towards the new week opening gap. Sometimes it will actually touch the new week opening gap, but the fact that we had that order block inside of a fair value gap, that lets you know that that is the reversal area. So once you see this long wick to the upside, and then price crosses above that candle, that is your entry. And you can take your first profit right when you get into this fair value gap. And then you can monitor the rest of your trade, but your target is above here. And we actually get there during the afternoon hour in New York. To recap, remember, the goal of trading is not just to make profits, but to do so consistently. The ICT Unicorn Trade is one way to help you achieve that consistency. By waiting for these ideal conditions and being patient, you can build your trading account faster and with more confidence. The ICT Unicorn Trade is a powerful tool in your trading arsenal. It's called a unicorn because it's rare, but when it does appear, it offers a high probability setup with the potential for significant gains. By focusing on fair value gaps and order blocks and ensuring confluence with other ICT concepts like the new week opening gap, low resistance liquidity runs, and timing during the ICT Killzones, you can dramatically increase your chances of success. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more trading tips and strategies. Don't forget to hit the notification bell so you never miss an update. Until next time, happy trading.